The question was, is this a trap that we had set up? And I think today gave us a little bit of an answer in the short term. Now, when we talk about where we're at, what's been going on here, we can identify that the 200 SMA is anything but a weak support to say that. As you can see, we did dip below. Once Bostic came out and gave any type of hope on the market, we reacted. And from that point, yes, end of the day yesterday, I did like where we were at. I really did. When you saw what was happening with the still lower highs being made, the lower lows established, I liked it. But then as we came into today, you saw continuation, and this was the red flag. And once we started coming out of this range, we came into supply. We trended here locally. And again, I'm going to give you the quickest rundown of this level. Basically trending to the upside, making those higher lows as we pointed out in the live. And you can see we eventually broke. Now, I think there's still some big areas we need to question and be worried about, because next week we're going to be getting those answers as far as where is the ultimate move. And when we look at this, it comes back down to this. And again, this is pretty interesting overall. When we come over to the NQ, you have some hard questions and you got to take a decent look in the mirror to say, am I ready to actually try to trade this? Because going into next week, as we get rid of everything, pretty interesting behavior here. We're just going to bring up the 200 MA so you can see this. And on NQ, and I posted this on Twitter, you have that structure. You have the potential bull flag, right? Trying to play out. Can this finally work out? We had a similar type of structure back here, in December. But the question now is, now we have everything lined up at the right time. So coming into this video, I still side with the downside coming from Powell on Tuesday, but we need to talk about exactly why. Now, before we get into that, to ask you to do two things: consider liking and subscribing. Every single day here on the channel, we're posting videos so you are prepared. And then tomorrow, just so you know, every Saturday, now we have a little bit of an educational short video to give you a little bit of an edge or give you some insight into how and why I trade the way I do. So hopefully you have a better understanding. But on this channel, I try to be as unbiased as possible. And when I say unbiased, I want to show you the winners. I want to show you the losers. Now, I told you about Nvidia. I told you about Tesla. And I want to show you right now. This was my loser on Nvidia. I posted on Twitter. It was $1,200. That was a loser that I had there. Now, I had a little bit more risk, but I cut that around 236 when you broke highs of the day, because I anticipated you'd push back to 238, 239, and the IV crush was going to be brutal. But I want to let you guys know, I try to show you the winners, try to show you the losers. Let's get back to the video. We have a lot to cover here. Now, when we look at the overall structures and the big things here on the market, I think you need to be looking at a few things. And we're going to start with some of the fundamentals and then move on to the technicals, because I think a lot of this is going to play a big part. When we look at overall what big money is doing, and big money, in my opinion, we're going to see them move as far as a less risky approach to the market. So when we look at yields, when we look at what's happening with bonds, I think we get a decent view of what's happening here. If we look at what's happening with the 2-year bonds, those are going crazy. I don't even want to discuss those right now because they're just absolutely ripping. But looking at the 10 and 30, giving you a visual of this inversion, and I want to give you a little bit of a backtrack. And this is something I don't think a lot of people talk about, is the 10 and 30 inversion. So you can still see we're at our basic highest level since essentially back in September. If we scroll all the way back, this was our 2018, which we've gone into why that was so important before, but the more important ones and the ones you're going to remember is going to be back here in 06 and 08, the housing bubble, what happened back here in 2000, the dot-com bubble, and I can go further, but that's the main focus of when this goes back to that. So we look here, this is the longest that we've consolidated at these high of levels, and I'm telling you, this has been one of the best indicators that's not late into the market and giving you visuals and moving on the market. As we align the S&P here, I want to give you just a little bit of a better look. And so what we're going to do is go full screen just really quick here. And I want to show you, as we've started to peak here, right? So this is when we start to peak here on the rates. Typically, while we're pumping here, we do get a move up, and then we drop while you peak, right? It happened again here. You had a move up while rates were going up, and then you dropped and spiked when you were peaking out there. Happened again right here locally and around September. We all remember that. We were moving up throughout mid-September, and then boom. Then we had it again right here when you bounced again here in November and December, and then SPY dropped.
Now, the most recent one is where we're at now. And we're starting to see things, in my opinion, get a little bit different. And if we look what's happening here, we're actually casually just going up here on the SPY, on ES, right? While, rates just continue to fly up. And when we look at the inversion and what's happening there. Now, what I will say that's interesting on this chart, something that a little bit interesting, is that we did get a little bit of downside specifically here on the 10-year and the 30-year today, right? So we had those really moved up, yesterday and today, and we had a little bit of a drop here. But if we still look, the 10-year is outpacing the 30, and you're well inverted now. I think it's a full inversion in like 2% right now. So 102% inverted. That's where we're sitting at. This has been a really good indicator. I still think this points to concern. But what I'm going to say here is ultimately going into next week, I think Monday you probably have a little bit of upside potential. It's just most likely that happens because we don't have any news being announced on Monday. But going into Tuesday, in my opinion, it's probably going to be your most important day until the Fed meeting, if not even more important. This is going to really point you in a direction. It's going to see where Powell stands with the 0.25 hike. Is he even considering a 0.5 hike? Is he very concerned about inflation and everything in between there? And again, I'm going to tell you right now, like I told you during when we had the Fed meeting in the beginning of the month, Powell's tone will dictate everything for the next 2 to 3 weeks, most likely, and it will ultimately change the overall trend. Now, when we talked about what was happening here on like NQ, what did we need to see to really become bearish, to really switch the narrative here? We needed to hold and make a new low here, right? That was the big thing. So going back here into NQ, we wanted to hold and make a new low. Let me just delete some of this so you can just get a better visual of what's happening here. We wanted to make a new low below 11.85, 11.8ish, right? And you did. You did make a new low, but we couldn't hold there, and it's coincidental you got that time and that talk by Bostic that really pushed you up. And ultimately, that's what set up this move. Now, you could also argue that you're getting some shorts getting out of positions, taking some profits, everything in between. I'm not going to go into the guessing game here, and this supply is now taken out. So we need to understand that. From this point, we immediately moved up into our next level here, and it's very clear that this is our next overall range here. You can see that we actually had some basing time in this period, also about right here. Now, I would not consider this a supply just based on how we sat here, but this is clearly going to be a support. And you could argue that this will go all the way down to like 12.4 to 12.35, but I don't think Monday will break above 12.4. That's my opinion. I think this is going to be definitely a line in the sand. It's also worth mentioning where we kind of stopped at here on the day. This was our swing high that we had back in January. If we look at what happened here, just really quick, look what happened. Swing high, we bounced, dropped, couldn't get a retest, and then pushed back down. We actually retested swing lows right here and got rejected and pushed back down. So that's how we're moving here structurally. So right now, it's kind of, I'm looking at it, I'm like, look, I'm optimistic. There's a possibility we can break back above, and that maybe I flip back to being bullish based on the trend. But as of right now, I look and see continued downside on the charts for myself. Now, another thing that I'm going to point out, it's a little bit ugly, so bear with me. Don't attack me. Look, I'm not a big pattern guy. I'm really not. You potentially, and it looks better on TradingView, and I hate to go to switch, different platforms because one thing looks better than the other. But what I will say is you are potentially forming a head and shoulders. It's very ugly though. The only thing I like is that you bounced off that same level down here near those lows right there. You can see you're making your level here, potentially making a head and shoulders going into the Powell meeting. On ES, you could argue it looks better. ES really gives you the best visual here because you can see structurally it looks far superior than looking at the NQ. So when I look at this, it definitely makes me say there's a lot of question marks going into this meeting. So right now you're asking about my positions. What did I do there? Obviously, I closed out my NVIDIA. I trimmed a lot of my Tesla just to reduce risk, but I still love Tesla as a trade, and I still love the downside opportunity there. Also, though, before I go into the plays that I'm going to be looking at with Powell and going into next week, because there's a lot of plays I'm liking, but looking right now, let's look at VIX really quick. You're coming right back down to these lows, people. And I mean, when I look at this, I get excited, but I'm also just like, it's more of the same. Now, what did we want to see from VIX? In my opinion, you wanted to see a break and hold of about 24. We just really never could get that going. We wanted to see it, couldn't get it. You got up, retested, pushed down. Go back, check the videos. I've said it plenty of times. Now, here, Again, if we come down to 16, we come down to 17 on Monday, it's setting up, in my opinion, for a great short opportunity. What happened before? We've been saying the $17 to $16 region is like a must grab on VIX. It's just been such a lucrative play, even going back all the way to 2021 and 2020. It was just the money play. But VIX so far hasn't done anything too impressive. We had one great, 2 great days of volatility, but besides that, nothing really happening. But you are getting slapped towards the downside. Even though, again, we've had a really good break back to the upside here on NQ and SPX. But what I will say is that this is locally about a 400-point move to the upside. In comparison, it's only about 30% of what we had towards the downside. So this 100%, if we still look on the broader scheme, yes, on a smaller time frame, we've made a higher high. But if we go to the daily chart, you are clearly still in the downtrend. You are still making pivot lower highs on a daily time frame. That's what you have to understand, right? That's what we need to understand here. Like right here, when we were structurally moving up here on the daily time frame, right? We continue to make higher lows and higher highs. When we look here on a daily time frame, it's very similar type of price action. We're still making lower highs and lower lows. That's important that we understand what's happening here. Structurally, you haven't broken it to where you're pushing back up on a technical viewpoint either. So I need that to be very clear here. As we go a little bit deeper into Bookmap also, I don't want to spend an extensive time here because today we just didn't have a lot of sellers on the book, okay? Worth mentioning, right? So when we look here, there wasn't very many sellers on the book. Today, it was all bulls. Bulls took over. They were going for gold. Sellers had established their positions. It looks like they started taking profits from that 200 SMA after the bounce there, but you're still trying to push up here. CVD remained green, representing a lot of the momentum. What I will say, the last hour of trading, even though you got a little bit of a press up on ES, you could still see CVD start to track back down. Normally, we wouldn't see that track back down until the after hours, but that took place during the whole entire time during power hour, which probably leads me to believe that's the reason we didn't get the push to the upside, is because we were kind of flipping there. But again, I think right now it makes sense for big money to not be pressing into anything when you have something like Powell speaking on Tuesday. That's going to be the most influential thing. I can only say it's enough. I promise you, Powell on Tuesday, most influential thing you'll get on the market. More influential than PCE, PPI, CPI. Powell, I'm telling you, you're going to probably move around 500 points within 24 hours after Powell says one word. Within 24 hours, I assume you get 500 points of action on the Nasdaq, probably 150 to 200 on the ES. And I know it's a bold statement, but that's where I stand there. Now, last thing I'm going to mention here is the DXY. And again, DXY has been interesting. Last time we talked about it was that bull flag you had back here. DXY, what I will say, you look like you're bull flagging again. Going into the 200 SMA here, I will say you bounced here a few times. It looks like you want to get another test of the 200 SMA. You haven't tested it to the upside since way back here on December 6th. It looks likely. If that happens, we have to side with you probably get a move down on the Nasdaq. But what I'm going to say is I don't anticipate DXY to break out of this either to the down or to the upside until Powell speaks. So again, I can only emphasize Powell. Now, my favorite plays going into next week, let's give you a rundown really quick. One, I'm going to say it, NVIDIA is pretty insane. I'm not gonna lie to you. If we look here at NVIDIA, you start to break above local highs here. I mean, at this point, you have to look at the potential upside here. We talked all the way about the gap fill you had up here at 258. You also have a range, I believe, at 252 locally. That key level that comes back into play, I believe it's right around this swing high you have about right there. So these are my two levels I'd be looking for. So if we go like in the 2-hour chart, I mean, if you get the break out here, you look great. I'm going to tell you right now. But beginning of the week, if you reject here, I'd be looking for a break and hold back below 233 to push us back down to swing lows 225, 227. Okay, so that's what we're looking for. If you start to hold above, we like it to the upside. Next up, Tesla. Tesla is still, as I call on my name, I still absolutely love it. Even though the reason why you got up today is because you had your Chinese sales from Tesla and they beat. Surprise, the Chinese market is absolutely booming. They've increased GDP expectations percent after percent each month. So they look very strong. Okay, they're probably the strongest market right now, them or Japan. If we look at what's happening here though, Tesla didn't really get followed through to the upside. You got rejected off of 200 multiple times and you're pushing back down. I'm going to say this again. I believe Tesla has room to fall to the downside. It's probably one of my favorite plays right now. What I will say though still is if you look at the higher time frames, possibly, and again, it lines right up with the indexes, you could argue you're forming a bull flag here. So again, you have to be careful in preparation with what Powell's going to say. However, I'm still going to tell you right now, I love Tesla to the downside. What would have me invalidating this is if we can break and make a new local high around 218. But I just don't think that's going to happen right now. I still think Tesla has a lot of weakness. Personal opinion right now. Next up, it's going to be Amazon. Amazon's doing it kind of to me again, right? I want to say this. Now, Amazon has upside room to like 96, so I'd be prepared and be a little bit vigilant. But if we look at what's happening with Amazon, I think we need to kind of come to a conclusion and an overall understanding. Right now, 96.33, it's that swing low also right there. That's where I'd be looking possibly to get an entry to the downside. I wouldn't be wanting to force anything here. When we look at Amazon though, a good rule of thumb here is watching Costco, watching Target, watching Walmart, because their inflation numbers are greatly going to impact what happens with Amazon and giving you a visual of profits and overall expectations with consumer spending. Costco, bad earnings. Walmart, not great earnings. Target, they're all not doing very well here. Amazon, great bounce so far. I've seen a lot of, examples of a descending wedge here playing out. But again, that's why I'm looking at 96.3 as a rejection point, not looking to FOMO whatsoever. Also, I'm going to tell you right now, I would not be shorting Meta for myself. They had really good news about what they're trying to do with Brazil and a new payment system. Honestly, it makes Meta a long-term great position with what they're trying to do there. I'm not going to lie. That could be awesome when it's integrated into WhatsApp. Understand that. Be vigilant, and I would say it's pretty amazing. Last one up is going to be Costco. Costco is a longer term play, but I need to start mentioning it right now. If Costco can get back down to locally, you kind of got down there a little bit today, but you want to get back to like 460 to 450. At that point, longer term, it becomes a great position, okay? Now, could you make a lower low here? 100%, totally possible, and you're probably going to get hammered if Powell comes out with a hawkish statement whatsoever. But I'm going to tell you, Costco has had some great recoveries. I think they're going to continue to do very well. Despite their chart, despite some of the dips they've had below the 200 SMA, which I said, if you break below 200 SMA, you've had 50 points of downside every single time. If Powell comes out hawkish, I still love them because what they're doing with their earnings is trying to build a customer relationship and trust with them overall. And if we look at what's happening, what they're doing, they haven't tweaked anything to increase their profit margins. They could if they wanted to. So I like what they're doing, and I like the potential here, specifically with Costco. I think they have a lot of potential. Love them. Would not take them off your board. I think longer term, this is something that I'm looking at for calls. Probably, again, 450-ish going down to locally 430, and then potentially if it gets down to 410. But again, Costco longer term, I'm loving them. A lot of opportunity setting up here. Don't force any of these. And again, if you're interested, all this will be on my Twitter. Also, too, Sunday newsletters coming out, so be prepared. Have a good one, traders.